Welcome to the Anchor Your Retirement podcast. I'm your host, Barbara Gullen, hanging out with my buddy and pal, Tony Shore. How you doing, Tony?
I am great today, Barb. You know this, though. I
Yes,
mean,
I
we
do.
were we were laughing and joking around before we started the show because I was
Just show
telling you.
prep.
Well, we were doing show prep, and I was telling you how Andy saves all the bloopers and goofy sound bites, things I say before I record, like radio commercials or something. Beverage. So we we have that going for us, which is nice.
That we do.
Yeah.
That we do.
Yeah.
Fitbit.
Fitbit.
Listen, with as crazy as the world is right now, we need a little bit of levity, don't we?
Yeah, I would say we do. I would say we do. It's crazy right now, and
Yes.
my wife Sarah and I are going to fly to Nashville this week, so I'm hoping that
Good luck with that.
yeah,
Let's hope. Yeah, now we are recording this, even though this one is going to air the first weekend in April. We're recording this a little over a week before the end of March.
Yeah,
And it's a crazy day in the life. We
Yes.
still do not have the Strait of Hormuz open. Hopefully, by the time this airs, we will.
I hope so.
TSA is still not being paid.
Which is unbelievable.
Unconscionable, actually, is the word I think we're
terrible.
looking for.
Yes, that's a better word.
There was an article that dropped in Fortune magazine today that hasn't gotten a lot of press, where essentially the United States is insolvent. We have $6 trillion worth of assets and almost $48 trillion worth of debt as of the end of September 2025.
Wow.
And we're talking about potentially taking military action in Cuba. Realistically, we need some good news in this world.
we do.
And I don't know about you, but I need a social media news feed full of puppies, kittens, unicorns, and rainbows right now.
Yeah, you're not going to get that from any of the regular sources. The 24-hour news cycle or even online social media has been fairly negative. Hopefully, some people say, "Oh, it's the end of the world." No, it's not the end of the world, but maybe we can see it from here. That's the old joke.
Well,
but I think things will work out. But it's just like when, and some things need to change, and hopefully cooler heads will prevail, and our government will get off its butt and do something and get something done.
It has been a volatile quarter in the markets, to say the least. We have seen days where it has dropped significantly and other days where it has jumped unexpectedly. I still think I saw a statistic yesterday that as of yesterday, the S&P 500 was down 5% for the month. And, it's not unusual that we have these intra-year corrections. Not that I think we're going to have a double-digit gain year this year. And if we do, we can pull that soundbite, and I will come back and say I was wrong. But, there have been a lot of crazy things going on in the world. And a lot of people are starting to get discouraged and just wondering if maybe they just ought to throw in the towel.
And get out of the markets, or
Right.
Or make some big financial move and move to gold or cash. You hear people talking about that.
Even gold has taken a hit. It was well over $5,000 an ounce a couple of weeks ago, and today, shortly before we started recording, it was pricing around $4,400 an ounce. So we've even seen a significant depreciation in that. And, we've talked about this a lot in the last couple of podcasts, or 2 or 3 podcasts ago, about emotional investing and taking your emotions out of it. When you try to trade the highs and the lows, invariably you end up missing both and can do more harm than good. Now, just going to throw it out there. I am an advisor. I may not be your advisor. And even if I am your advisor, I'm not offering you specific advice on this podcast. But when we look at all of the crazy things that are going on, the unemployment rate is ticking up, the number of jobs available is declining or flat. Unemployment rate for college graduates is higher now than it's been in well over a decade.
Yeah.
It came in at like 5.6% for new college graduates. And I have a niece who is graduating who wants to take a gap year before she starts her graduate program and is having a hard time finding full-time employment. So,
That's rough.
it is. And it's not only looking at things from the macro, the global standpoint, but a situation like that brings it down to basically being in your backyard and you think about things differently.
Yep. Yeah, I think that it has been a bumpy quarter. The first quarter of 2026, a lot has gone on. And you hate to be the sky is falling. That's the news media because the negative news sells. But there are a lot of things going on to be concerned about. And I think it just reinforces the idea that when it comes to finances and what's going on, Barb, I think your point is make sure you're working with a professional and don't let your emotions dictate how you react to these events, right?
That first and foremost, yes. And obviously, with the cost of gasoline and fossil fuels going up right now because of what's going on with the Strait of Hormuz, a lot of people may not realize that a lot of fertilizer components come through the Strait of Hormuz. So farmers are looking at increased costs to manage their crops this year. It is difficult when prices of everyday necessities, because you've got to get back and forth to work and you most certainly have to eat. It can be difficult to be disciplined enough to stay the course and continue saving and investing.
Yeah. Yeah, staying the course is important. It can get hard, but if you look back at other black swan events like 2008, when the market crashed because of the housing bubble, or in 2020, when COVID, 2019, 2020, and then
Even
again,
last year with
yeah,
the
last year
tariffs.
in April, the tariffs had dropped almost 20%. But people panic and then they sell. And if they had stayed in, look at the market has hit record
Right.
highs the last 3 years. So you don't want to panic and get out or try to time it, but you do want to be diversified, especially as you get older and go into retirement.
Yes,
You want to,
and you do want to take measured risks.
yes,
I met with somebody earlier this week where we were looking at a stock intersection report that was generated based on Morningstar. So it wasn't us trying to skew a report one way or the other, but the top 5 or 6 holdings in her portfolio were all part of the Magnificent Seven. And, as the technology sector catches a cold, your portfolio can end up with bronchitis or something more severe if you haven't balanced out that risk and managed things wisely.
Right. There you go. And I think that's really, obviously, people don't always work with trusted professionals. Sometimes they
No.
try to do it themselves, and that's where they get into trouble, right? And when you say manage wisely, that's where you come in.
That's what we endeavor to do here at
Yes.
the firm. Especially when you end up with a lot of exceptionally intelligent people, and there are plenty of them out there in the world that do this. When you are younger, if you educate yourself, you can do a decent job of managing your own portfolio sometimes, especially with all of the tools that are available now. But as you get older and you get closer to actually needing to draw on those assets and needing them to last a lifetime so that you truly can retire and not go back to work, as a financial services professional, we have access to tools that you can't acquire on the street without somebody who is a qualified professional. It's the difference between going to the grocery store and getting painkiller or a cold remedy off of the shelf versus needing a prescription to handle an illness and manage that. You cannot go to the pharmacy counter and say, "I'd like some penicillin, please." They'll ask you for a prescription. It's much the same kind of analogy with working with a financial services professional. You might not need it, although I think you do in the early years so that you're laying a solid groundwork. You can manage it for yourself for a little while, but then as time progresses and you get closer to needing that money, you definitely want to get the assistance of a professional so that they can help you make those decisions from a more informed standpoint.
Yeah, exactly. Again, keeping those emotions in check is huge, and with all this going on, it's so easy to make costly mistakes too. I mean,
It is, and it's not only keeping your emotions in check, it is understanding that the things that you might have learned about investing 15, 20 years ago, those rules don't apply anymore.
right.
Because the whole landscape of investments and how you manage a portfolio have evolved and changed.
Quite a bit. I mean, things change from year to year, let alone 5, 10 years ago. I always say this isn't your grandfather's or even your father's or mother's retirement, right?
No, it isn't. It
Things
isn't.
have changed. Retirement planning has gotten more complicated. I mean,
It has.
The IRS code, all the bills, the Secure Acts, all the changes they made, the big
And the
beautiful
fact
bill.
that we're living longer and the need for planning for that care
Right.
and the need to make sure that with longevity on our side, that the assets that we have last that long.
Right. And will they last as long as we do? And again, I always say the good news is we're living longer. The bad news is
We're
we're
living
living
longer.
longer. Yeah. So we have to plan for that. Yeah. And healthcare costs have gone up. You have to plan for that. Taxes are always an issue because people now put usually all their money for a lot of people is in a tax deferred account. So they'll owe taxes on all that money in retirement. So
Yes.
having a plan for that going in, doing Roth conversions now when it might make more sense. There are so many different strategies, right?
There are. And conversely, there may be people that are investing in a Roth 401k or a Roth TSP where they would benefit more in the immediate future from a tax perspective to be putting some of that into a tax deferred account. If you're an exceptionally high wage earner, even though I am an advocate for Roth accounts, I have participated in my own Roth 401k. I also participate on the traditional side. It just because it's published in a nationally recognized financial magazine doesn't necessarily mean that that's the right advice for you.
Yeah. Yeah. I read these articles all the time, Barb, that say you need $1.7 million in order to retire. And they're like, how do they know how much I need to retire?
Again, if you've got longevity on your side, if you have a history of prolonged illnesses in your family, like with both of your parents struggling with Parkinson's, your situation may be very, very different than somebody else who is the same age.
Yes, exactly. And so you can have a twin brother the same age or a twin sister, the identical twin, and they might need a completely different retirement plan because
or they might be in a car accident, and then that changes what happens to their family significantly if they don't have enough life insurance.
Right. So everybody's situation is different. And so you have to look at your own. You can't look at what your neighbor's doing or a coworker or a friend or a relative. So many people get caught up into these rules of thumb. And sometimes they're good starting points to get the conversation going, like the rule, the rule of 100 or the 4% rule or different types of these rules or the three-legged stool, the three buckets. But you have to figure it out for you have your own goals, you have your own time horizon, you have your own timeline. Your spousal situation may be different. Your number of children or where they're at, what ages they are at,
Yes, or
these types of things.
and if you're a blended family, then estate planning and proper estate planning is a must.
Yeah.
These
The
they're all
legacy plan.
things that
The
end up
legacy plan.
playing into an overall financial plan that the layperson might think about, might not think about, or might not prioritize the way a financial services professional would. It's, everybody, we all have our own unique fingerprints. And realistically, looking at your retirement and your financial circumstances is just as unique as that fingerprint. And when we go through a quarter like we have, getting back to the title of the podcast and trying to bring all of this around full circle, for somebody who is in their 20s or 30s, it's been kind of a crazy quarter. For people who are planning on retiring at the end of the year, were you invested so aggressively that this has derailed some stuff, and now we're going to need to pivot for the next 8 or 9 months to make sure that we're in the same place that you thought you were going to be before this year started.
Yep. There you go. And so what advice do you have to people? What do they do to avoid making mistakes, to avoid letting a bumpy ride so far this year derail their retirement plans or their financial plans?
Yeah, I think that you need to be working with a professional. Okay. Mistakes are a part of life. It's how we learn. The question is, how big is the mistake? How many times do we make the same mistake? And are we seeking wisdom and advice from somebody who can help us navigate pitfalls that we may not have seen? Because, a tax preparer, a CPA is going to look at a set of financials very differently than somebody who is a newly minted tax preparer who doesn't have the credentials. It's very similar. And, I talked to somebody this weekend that retired when he was 47 years old. So his time horizon looks very different than somebody who is retiring in their 50s, late 50s, early 60s, or even on into their 70s.
Well, it is very different. And I think that, like you say, one thing you made me think of, there's a big difference between tax preparation and tax planning.
There is.
You can have somebody do your taxes. That's what we're all in the process of right now, probably. 'Tis the season, right?
Yes.
We're coming up on deadline here. But that's what we're talking about is different. You need somebody who's going to look ahead and say, okay, what you're doing now might save you a little bit this year or for last year's taxes, but what impact will it have in 5 years or 10 years when you retire or next year, whenever it may be?
And a qualified fiduciary, financial professional can look at things long range in a way that somebody else might not. I meet with people from all different walks of life, and some people have a pretty good grasp of what's going on. Other people don't understand necessarily what the implications of things like the Secure Act could be, not only to themselves, but to their children or their non-spousal beneficiaries in how they're going to have to take distributions out of an account.
Yeah. Obviously, when you start taking distributions, you can get into a world of trouble with taxes and with sequence of returns risk and things like that. So,
and on top of that, you can cause yourself additional financial harm by taking distributions that then push up your adjusted gross income, where once you're eligible for Medicare, you have to start paying a higher premium for Medicare Part B because of your adjusted gross income. And are there ways we can create income streams for you that do not get added into that taxable income to help preserve your IRMA opportunities?
Yeah. I think that's huge. Obviously, IRMA comes into play, other tax things come into play, Medicare, Social Security. I mean, we could go on, but this has been a great discussion. Is there anything else you want to add, or let our listeners know how they can get a plan in place to deal with all of this?
Of course, they can always call our offices at 913-553-6222 or go to our website, bgwealthmanagement.com. There's a button at the top of the homepage that says schedule a consultation. Those consultations are complimentary and at no cost to you, the consumer. It is a situation where, if you're concerned about the volatility that you're seeing in the market, because the market actually tracks a volatility index, and that has been going up and up and up and up over the last few weeks. The question isn't if you should be saving, because you should be, but it's where you're saving and how you're saving, and what kind of income opportunities we can create for you and the tax implications of that. This quarter has been a bumpy one, but I have said from the beginning, since we started talking about this year, that I anticipated we were going to have a volatile and bumpy year, with it being a midterm election year. And then you throw all of the other geopolitical stuff on top of it, and it only makes sense that the market is nervous right now. The market doesn't like unknowns, and it doesn't like instability. And right now, the world is serving us a heaping helping of both.
A heaping helping.
A heaping helping.
I love that. I love that. So how can our listeners out there and viewers get a hold of you, Barb, to set up a no-charge consultation?
Go to our website, bgwealthmanagement.com, or call our offices at 913-553-6222. Connect with our appointments and scheduling desk, and we will get you on the calendar to meet with either myself or one of our other qualified fiduciaries in the office.
That's awesome. That sounds great. Good opportunity. Listeners and viewers, make sure you contact Barb. Barb, I know you love to chat with people, talk to them, and help them. I mean, that's your reward. That's a big part of why you do what you do, is to help people. So
it is.
Pick up the phone, give Barb and her team at BG Wealth a call, because you need to have a solid plan in place, or get a second opinion on what you do have. So great show today, talking about trying to land this bumpy first quarter, and hoping the rest of the year levels out a bit.
We can hope, but I'm not holding my breath at this point.
Yeah, that's true. That's true. It might be a rough ride this year. We've been spoiled the last 3 years, haven't we?
Overall, yes, but each of those years has had its moment, like we had last April.
And especially for federal employees, they've had some bad moments last year. So it has been a bumpy ride for different groups, but right now it seems we're all experiencing it. So
it sure does.
Let's hope that the things that cooler heads prevail.
That would be nice.
That would be nice. All right. Thanks, Barb. Great insight today. Listeners and viewers, thanks for tuning in. That does it for today's episode of Anchor Your Retirement with our host, Barb Goen.
We'll see you soon.